Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The week started with a strong risk-on mood, and equities rose on Monday in Asia, and especially in Europe. Wall Street opened with the same vibe, but lost momentum in the middle sessions, although it is returning in the later session. It's volatile. But first, in Main Street, US, the New York Fed's Consumer Expectations Survey mirrored the other recent sentiment surveys, noting a defensive turn in the mood. Consumers' year-ahead expectations about their household financial situation deteriorated in March, with the share of households expecting a worse financial situation 1 year from now rising to 30%, the highest level since October 2023. Those surveyed said they see higher inflation in a year, up to 3.6% from 3% in the February review. The expectations for earnings growth fell, and for joblessness, it rose. Of course, this one was taken before the heavy tariff policies hit in early April. The April update will be available on May 9th. In Washington, the Trump administration is moving swiftly to end enforcement of white-collar crime, dismissing federal prosecutors involved in enforcing foreign bribery cases, crypto crime, and money laundering crime. It's open season for white-collar criminals there. Washington is also apparently open for far-right Russians. It's also risky to visit the US. EU diplomats are now being issued with burner phones for their visits, just like they get when visiting China or Russia. On the tariff front, exemptions are coming for car parts. New tariffs are coming for pharmaceuticals. The common thread is bolstering profits for campaign supporters. Need a favour? Go to Washington with money for Trump. In Canada, their central bank is about to review its monetary policy settings. It was on a rate-cutting track, but is now more likely to leave policy rates unchanged given the inflationary threats from the trade war. In China, their exports surged by 12.4% in March to $314 billion, far above market forecasts of a 4.4% rise, and accelerating sharply from a 2.3% rise in the January to February period. It marked the fastest increase in overseas sales since last October, driven by the urgent front-loading before American tariffs took effect. Since November, when talk of tariffs first became a credible risk, the rise in Chinese exports has been exceptional. Meanwhile, March imports in China fell 4.3%. As a consequence, China's merchandise trade surplus hit record levels in 2025. And we exported 13% more to them in the first quarter of 2025 from a year ago, but imported 5% less. In contrast, Australia exported 29% less and imported 5% less. The US Treasury 10-year yield is now at 4.37% and down 13 basis points from yesterday at this time. And the price of gold will start today at just on $3,213 an ounce, down $23 from yesterday. And oil prices have dipped 50 cents and now at $61 a barrel in the US, while the international Brent price is just under $64.50 a barrel. And the Kiwi dollar is now at 58.8 US cents and up a half a cent from yesterday, and it's higher since mid-December. The fall in the US dollar extends. Against the Aussie, we're up another 20 basis points at 93 Australian cents. Against the euro, we're up 60 basis points at just on 51.9 euro cents. That all means our trade-weighted index starts today at just on 67.3 and up 40 basis points from yesterday. And the Bitcoin price starts today at $84,546 and holding, down a mere 0.3% from yesterday. Volatility over the past 24 hours has been modest at plus or minus 1.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.